All right, back to work. Weekend's over. Tuesday is right around the corner. Hope you guys had a great Monday, but Monday is over with. Time to get ready for tomorrow. It's Monday evening after all. It's the 7th day of February, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. And if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades. Setting up for Tuesday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background. As you can see, get the S&P ready. NASDAQ's ready. The oil is always ready. Glad to see you are ready right along with me. Got a lot to cover in tonight's lesson. Got a bunch of good trades setting up for tomorrow's trading session. Before we jump in, though, and get our hands dirty, not to worry, I'm going to cover all my favorite trades in tonight's video. We'll also give you guys some stuff to avoid to keep yourself out of trouble and finish the day tomorrow in the green. Whether you're trading with us in the trade room or you're trading on your own out there on Tuesday's trading session. Before we jump in, though, as always, make sure you subscribe to our YouTube channel. I publish this video every evening on my YouTube channel. Make sure you subscribe. Hit that little bell icon because a lot of this stuff is very time sensitive. And don't forget, any questions, drop those questions for me in the comment section. I would love to answer any questions you might have along the way. And if you enjoyed the video as much as I enjoy making it, if you tune in every evening, hit that like button for me, that thumbs up for me in the channel. I really appreciate you guys carving out some time with me here on this video newsletter. But enough of the intro, though. Time is ticking. Tuesday is not going to trade itself. What's going on here for Tuesday? Well, I'll tell you, everything is looking pretty bearish as we go into Tuesday's trading session, right? Big move down on the S&P, big move down on the NASDAQ, relatively big move down into a range on the oil. So I'll tell you, the sellers have pretty much control of all of the momentum right now, but that's about where it ends, because if you look at the charts tonight, we're going to go into a lot more detail into these charts individually. But when you look at these charts right now, it is not easy to find some reliable entry short right now. It's tough to find a way for sellers to participate with these markets right now. It looks like between failed rotations, I'm looking for the long side here, right, on the S&P, NASDAQ, and the crude oil. Now, obviously, we've got some, obviously we're going to keep our eyes open for sell setups. There are a couple things I'm looking for, but really for tomorrow, though, we have to either get way up around these highs and then sell it back down again, or we have to see these bears actually hold these moves going lower. I'm going to talk about the buy side, we'll talk about the short side, and we'll talk about kind of what we need to see to qualify the best entries for us tomorrow in the trade room. Now, speaking of tomorrow, though, tomorrow's a Tuesday. Before we jump into and looking at the trade setups for Tuesday, why don't we grab a look here at the news schedule for tomorrow, because I want to make sure we're all on the same page here for the rest of the week here this week. Tomorrow, and really until we get into Wednesday, Thursday, there really isn't a lot of news for us to worry about here. It's the second week of the month. The second week of the month is notorious for being a little bit of an empty news week. We're coming out of that first week of the month, always very busy first week of the month. We had non-farm payrolls last Friday. So, these second week of the month is usually known for being a little bit lower on the news side. Now, we got a bit of earnings. We got some news here. There really isn't anything tomorrow I would worry about. There's no real earnings reports to worry about tomorrow as well. We're not going to start dealing with some big news and big earnings to worry about until Wednesday and Thursday. So we'll talk more about what the big news of the week later on this week. You can see, of course, we got the oil report. We got what is probably the biggest news of the week here overall is that CPI number, of course. We keep breaking records for the inflation numbers coming out. That consumer price index is an inflation number. And of course, I would imagine the whole world is looking forward to seeing that number. Well, depends on the way you look at it, right? I think everybody's curious though what the numbers will be on Thursday at 8:30 Eastern time. That is the big news of the week here on Thursday. We get some earnings reports, right? We got Uber on Wednesday. We got Twitter on Thursday. So obviously NASDAQ will be affected by that a little bit later on in the week. We'll talk a lot more about that obviously later on in the week. For right now, though, there's nothing really big tomorrow. So, typical milestones are 9 o'clock, 10 o'clock, 11 o'clock. we'll go over those smaller details tomorrow in the trade room. And speaking of trade room, what I'll do is I'll put a link down in the description of the video tonight if you want to come out, join us in the trade room, right, and trade right along with us. Our trade room is a great place to learn and earn and do it all with me. So no major news to worry about tomorrow. We'll talk more details about news as we go into tomorrow night's video newsletter, getting ready for Wednesday's trading session. Back to our charts though. S&P, Nasdaq, crude oil, a lot of ranges, right? A lot of ranges right now. Range on the E-mini, range on the Nasdaq, multiple ranges here on the crude oil. And let's get this thing going, right? Let's jump into the S&P. Let's talk about my favorite trades for tomorrow. And, like I mentioned earlier, there's a lot of bears in the market right now. There's a lot of bearishness in this market, right? Get that big move down here on the E-mini. But like I mentioned, it's when you see where we are, right? We're at the low of day, we're at the expanding triangle area. This is a very difficult place for me to get convinced to get short, right? We know that ranges act like magnets. And so really at this point, the buyers want to go right back up into that trading range. And really for the most part, they want to take out those highs on the other side of it, right? So really right now, the buyers want to get back to that 4,500, right? We saw just a little bit of attention to that area here today, right? 4,500 is going to be a big magnet. Well, really what it is, it's 4,501 and a half, right? The high of that range, the other side of the range, right? On the triangle side, right? And then let's not forget, we had that big run higher on Friday. So if the buyers really get what they want, we're going back to that 45.32 half level. Might not be tomorrow, but hey, you know that high up there has a big red bullseye right on that high, because we know that anytime we see those big runs, right? Yeah, they're going to pull it back, right, to attract more buyers down here, but they want to get back up to retest the high. Where do the bears want to get to? Again, the bears have all of the momentum right now, but again, this is definitely not where I want to be getting into a short position right now. I'd rather wait for those sellers to fail and buy this thing going right back up into that trading range. But I'll tell you, if the bears can hold this, if the bears can hold this and keep it going, if they can give us a 1, 2, 3 breakout, they didn't do it there. They had a perfect spot there to hold a breakout there, right? We're going to probably end up getting one of those over here, okay? Where do the bears want to get to, though? They want to get down. I had mentioned this measured move. The bears are going to want to complete a measured move, right? This is probably going to be seen as the breakout leg. When it comes to ranges, by the way, the breakout leg is known as being the measuring leg, okay? So we'll have to use that as the breakout leg. So imagine that leg down, right? That's going to give us, it's a little bit tough to tell right now where exactly, how far this thing will pull back. But let's assume they pull back into the belly of that trading range, right, and go lower. That's kind of where that's where the bears want to get to, right? And that's pretty easy to see because you look left and you can easily see this 44.40 area is the low of that big move down that we saw, early last week, right? So the bears would love to get down around that 44.40 area for tomorrow if they can keep on. Look at the wide open space, though. Look at the wide open space underneath this. We don't see anything really until, my goodness, you're down 43.30 area. Look at that wide open space right there. And now again, the bears have some work to do here, but if they can break this low, right? That's the first objective of the bears. If they can break that low, there's a lot of open space for those bears to really binge on this thing going lower here. So we know kind of what the buyers want to do. We know what the sellers are looking for here. How do we make some money off this stuff, right? Because that's the goal. The goal is to find ways to make some profit on this. Now, again, as I mentioned, not looking for a short trade right now, but the bears have all of the momentum. So here are kind of 3 different ways I'm looking to buy this market here tomorrow. One would be kind of probably the most bulletproof long would be to wait for a retest of that low and then look for a failure going back up from there. Right? We know that anytime we see a strong move in one direction, the odds are pretty good they're going to retest that low. Now, of course, there's a range in here. And when it comes to ranges, strong moves like this one, right? Strong moves will oftentimes reverse and come right back into that range again. So there's no guarantee it'll retest. But one way I'm looking to buy this will be basically not a double bottom, but basically waiting for a retest and then using what I call a 2-try failure pattern, right? Basically letting the bears try twice and then literally buying right into the stop losses of those sellers, right? So again, we call these 2-try failures, right? So one possible long setup right now is to wait for the retest, get the bears to try twice down here. Think about now, range above you is a magnet. Okay, again, we're at support below the range. We get the bears trying a couple times. All their stops are just waiting to get torched as it runs higher here. That'll be an easy winner going right back up into that trading range. Now, we oftentimes, when we get those setups, we oftentimes will see it retest the low, get those bears to try once, twice, and then as we run higher now, we start looking for that rotation trade, right? So we know where the market wants to go, right? They want to get to the other side of that trading range. Now we grab our failure off the low, but now line up these highs, right? Right off those highs right there, bring down that channel, and then look for one of the entry setups that we talk about in that free course, right? Could be a trap, could be a failure, could be a pullback, right? Combination. Again, these are the same setups that we talk about in that free trading course, right? I know a lot of you guys have taken that free course already. You've learned the setups, the rules, the entry techniques, the trade management, which, by the way, if you haven't done so yet, right? If you haven't grabbed that course yet, what I'll do is I'll put a little pop-up there for you in the upper right-hand corner. Grab that free trading course, learn the entry setups, but most importantly, learn where and when to apply them and when to avoid them. That free trading class, the little link that will pop up there, that'll give you the full roadmap that we use every day in our trade room. If you're sick and tired of missing the best trades or taking too many losses, that free course will really clean you up nicely and give you a nice roadmap to follow every day. Same thing we do in our trade room. So again, we double bottom, we rope in those bears with that failure pattern, right? And then we grab that first pullback, right? Again, a lot of times you'll draw that channel off right off those highs, right? Bring it down to that low, and then trap set up below the low, failure pattern below moving average, pullback set up. We'll obviously wait and see, right, what we're going to get once we get there. But that's another way I'd like to buy this thing, right, going higher here. And again, we know where the market wants to go at that point, right? It wants to finish off that move back to the other side of its trading range. Okay, here's another scenario for us. What if we don't get that? Right? What if we don't get a retest of that low, right? Here's when we look at it. What if I play the game against them? What if I go off the lows up around the highs now? This could be a channel, right? What if I went off of these lows, right, off of that low, and this is a channel now, right? So let's imagine now the bears trying once, the bears trying twice. Now, here's the kicker on this one. Because that momentum is so strong, right? It's so strong, I really like to incorporate a trap entry into this type of failure setup, right? If we go back and retest the low, I can get pretty aggressive on my long, because at that point now the bears have kind of got what they wanted, right? They've already retested that low. If I don't get that retest, I'd like to grab that trap, right? So again, same idea, right? Where bears have all the momentum. The range above us is the magnet. I want to sell down here, but I have to respect the bears. Let them try once, let them try twice. I like to, between you and me, I always look for those channels, off that high, off that low, grab that trap. The channel is definitely not required, but the trap, I would like to see that trap there and get that and trap in those bears. Nice strong signal, right? And again, at this point now, remember, you got to be careful chasing it as it goes higher here. So if all we get is this little trap right now, be very careful if it starts to, really run up like this. Be really careful buying that pullback right up here. You know what I mean? I like the idea of buying it on the way back into the range, right? I love the idea of buying it on the way back into the range. But once we start getting around those highs, though, that's when you got to be careful, right, with that pullback. We'll know more tomorrow, obviously, but that's the idea here. Kind of a second variation. We can be right. We can be a buyer on this. What if the market was to run back up instead, right? What if we were to start to really push and run higher? What if we get like a grinder, right? What if it just starts to kind of grind higher and grind higher and grind higher? Okay, here's one more scenario to keep in mind. Now, draw that trend line right off that high. At this point now, we're not so worried about the bears anymore, right? We've kind of seen the bears evaporate at this point. Now we get to focus on buying as low as we can get. That's why I like to use these channel techniques. We'll draw off the highs, okay, and then we'll bring it right down at that low. And then again, I love traps, and you'll learn all about traps in that free course that's linked up in the upper right. You'll learn all about traps. I love to find traps in these sorts of grinders, right? So wait for that pullback, get underneath that prior swing. Again, get that, or underneath the moving average to say, get that trap, get that failure, right? And then we'll hit it from there. Again, be looking for those long side trades, right? Underneath this trading range, right? Underneath this trading range. Heck, it may even go back up into that, right? Might even go back up into the range, chop around for a little while, and then pull back from there. That's not horrible either. We oftentimes will see that where the market will get stuck inside of a trading range, right? It'll pull back underneath the range, because buyers will eventually run out of bullets, if you will. Let me get this chart looking a little bit better here, right? We go back, we go up, we chop around into the range, right? Remember, ranges are magnets. And so what do we do if it goes sideways here inside that range? We look for areas of support below the range, all right? We've got a bunch of them marked up here already on this chart. We wait for that pullback. We rope in those bears with a failure pattern. Right? Let those bears sort of sell short here right now. It's not the place to be selling short. Not at support below a trading range. Let some other poor sucker be that short seller. You know exactly where those stops are now, and you can trade, right, that seller failure pattern, we call it, going back up into that trading range, right? Makes sense? Okay. Now, how do we sell this market? And again, I'm sure there'll be plenty more buying opportunities as we go higher here, right? Because potentially there's a big move going up, right? We'll see what we get tomorrow, and we'll find more setups if we can really push up through those highs. How do I sell this? How do I sell this right now? What's the easiest way to short this thing? I'll tell you, the only real way we can sell this would be if we get back up, look for that same idea, right? The 1, the 2, that trap off that high. This is basically the same pattern I just talked about down here, right? A 2-try trap going off the high, or we run up, they retest, and then we can get a lot more aggressive, right? We get a lot more aggressive. 1, 2, draw that trend line. Stops are sitting right below that low. Again, this is the same exact setup that we talked about off these lows, just applied back in the opposite side here. The hardest part about this will be trying to sell as we go lower, because as you can see, there's that big support level down there. So we have a pattern in our trade room called the 1, 2, 3 breakout, right? 1, 2, 3 breakouts, you can see, don't happen as often as you think they might. We see a lot of times when we see a trading range, the market breaks out of that range. It looks like they're surely going to keep this thing going, but they don't. So if they can't hold that pullback, what do? You literally buy right into their stop losses, going right back up into that range. That's the game plan here for us if it goes sideways. Now, if they can hold that pullback and run lower, right, like here, if they can hold this pullback and run lower, now what we'll do is we'll drill down. This is a 7,000 tick chart. We're not going to trade a 7,000 tick chart. We'll drill down. We'll find that new channel. And guys, my job here will be, I have to find my short, either a trap entry or a buyer failure entry, before we get to that low, right? I really got to get into that before we get back to that low here. I think there'll be just as many buy setups down here as there are here, really. So let's say, for example, we do get that strong run lower here, mark up that channel, find that channel, mark up your prior swings. And again, remember, anytime we see a 1, 2, 3 breakdown, we leave that trading range. we know the odds are very good. There's going to be a lot of bears selling that first test off of this channel, right? Again, it could be a trap setup, could be a failure setup, could be a pullback combination. Again, the same setups we talk about in that free trading course. So make sure you grab that link in the upper right-hand corner, right? Now, do not underestimate the power of these buyers right now, because you could easily see this could easily end up retesting that low, and then all of a sudden bears once, bears twice, and then right back up again, right? This could easily do that. We could easily take out that low, 1, 2, 3 breakdown. There's your channel. We short that first test, right? Because the first test is the best test. We take out those lows now, and now we go, same idea, right? Same idea. Bears try once, bears try twice, trapping those bears, get it running higher, find that new channel, and buy the low of that new channel, right? 2-try failure, because again, it's all bears at that point. But again, we get a big range above us. We're at a major area of support. I'm not going to sell down there, but I will gladly let those bears try a couple times. If they fail after 2 tries, we buy into stops. And then again, watch that new channel off those highs, drill down to your faster time frame, and grab that first pullback, traps, failures, pullback combos off the low of that channel. All right. And again, I wish I had more time to go over all the nitty-gritty entry techniques, but you'll learn that stuff in that free course that I mentioned earlier. All right, guys. And again, there will likely be more buying opportunities as we break higher here, but we'll have to wait tomorrow and see what we get once we get there. All right, let's keep going. S&P looks pretty good. How about some Nasdaq? Nasdaq is very similar to the S&P, right? Obviously, the S&P and Nasdaq are, they're cousins, right? Obviously, very different, right? Very different cousins, but they definitely are cut from the same cloth. Now, the Nasdaq, what's the most important kind of takeaway right now? Well, we know the day was pretty much a range day, right? Went up into a range. We see a very strong move down. And anytime we see a strong move in one direction, what do we know? We know they're going to try to retest that low. So now you can see the sellers have already retested that low. And this is definitely where we can start looking for those buyers going right back up into that trading range. Right? You can also see too, remember I said earlier, the breakout leg is the measuring leg? Right? Remember that earlier? I said in a range environment, the breakout leg is the measuring leg. That's a really good example right there. Okay? See how it, now again, it isn't this whole leg. Okay? That isn't the breakout leg. It's this leg right there. That's the breakout leg. And you can see that it's pretty difficult to ignore that. That's way too perfect to be, way too convenient to be coincidence. So it's definitely going to be the breakout leg there. That's their breakout measured move. Okay, so think about kind of what's going on, right? We know this is a range-bound market. We know that range is a magnet up overhead. We know the bears have all of the momentum with that big move down, but now they've already retested their low, so the sellers can kind of check that off their list. And we also, of course, have a major area of support down below this trading range. You could also say, just with the S&P, there's a lot of support right below us. It's difficult to want to be a seller down here. Now, I do think one very kind of interesting part about this is you'll notice I've drawn that channel like I always do off of those lows, and you're bringing it up around the high. And you can definitely see the bears really sold off that channel. So I do think, right, we have to be aware that this channel high is probably going to see some attention on the second try here. But remember though, the first test is always the best test. This will now be the second test of that channel. So I don't think this channel, if we do end up going higher here, I don't think that channel will be able to stop this thing, but I do think it's something we have to respect. And so we'll definitely be talking about that as we plan out our entries on this. One more thing that I kind of see here right now is we can see kind of the underbelly, right, of this trading range. In my trade room, I call this the edge of the trading range. A lot of times what will happen is they'll try to break through it, they'll try to hold it, and they'll get dragged back up into the range. We're right there right now, right? So I would expect there to be some bears coming in right here. Makes sense, you know what I mean? Right? What is support becomes resistance. And that's exactly what this area is. Now, again, bears have all the momentum, but I am definitely not in the mood right now to get short down here. This is definitely not where I want to be selling. I would much rather be a buyer on this. I want to use that 2-try rule. You know, we like to give, in this case, the sellers the benefit of the doubt, see if you can't trap them in and go from there. Now, this is a relatively strong move here. So the same kind of idea applies really to that we talked about the S&P, right? Probably the best possible entry long will be to wait for it to retest, right? Take out that low and then open those bears, right? Use the 1-try, use the 2-try failure. I mentioned earlier that I can use a trend line for the entry. Obviously, traps are always great, you know, for entries, but I want to make sure I, at the very least, get those bears trying twice. All their stops now, you know, think about it. If you get stopped out of a short position, what happens? If you're short and you get stopped out, you're buying. Right? So when those stops get run, this thing oftentimes will really fly and run higher here. That's, of course, what we're hoping for, right? Want to see a nice, strong signal candle coming off that second try, buy right into those stop losses, okay, as we go. Now, this is where this trend line overhead comes into play. Now, I had drawn earlier this trend line down, right? That trend line down, okay? That's the real trend line here. Okay, that's the trend line, and we'll talk more about this in the trade room, obviously. That's the trend line that you really got to respect, right? I say that because it's the first swing. Okay, you'll learn this in the video classes, but the way you want to draw trend lines is off the highest point and the first swing. Okay, I mentioned this because, again, yes, we're going to probably see some bears trying right there, but I don't expect that to be a major level of resistance. I expect there to be some bears there, and hopefully we can use those bears to fuel the next leg going higher, right? The buyers want to get back up into that trading range. The buyers want to take out those highs on the other side. The buyers would love to go all the way back up and take out last Friday's high all the way up to those highs here, right? The bears, of course, just like we talked about on the S&P, the bears want to come down and take out those lows, and if they can break below that, there's a big range down there at 14,150. That's a pretty big ask for the bears right now, considering the situation we're in. But hey, anything is possible these days. Anything is possible. So we know how to buy this thing. Right? We know we want to buy it. Again, one option is we double bottom or we retest, right? We retest that low. The bears come in, the once, the twice, get that, right? Get that failure and that run going higher. What you're going to want to do on this is either A, grab that add-on entry before we reach that trend line, which would, in all reality, be probably the easiest way to do it, right? Again, it's a failure, and then we grab that first test. Could be a trap setup, could be a failure setup, a pullback combination, but that's the idea, right? Failure into that first test off that, okay, off of that channel. Let's say, for example, though, that instead all we get is that retest. We get our 2-try failure, and we really start, right? We really start now to run and go higher. We don't get the re-entry on the way back higher. Now let's use that trend line as an area of support. And one of my favorite ways to do that is as the market starts going higher, draw that channel right off those highs, right? Bring it right down to that low. Think about now where those prior swings are, and then we get lucky, right? Then we get lucky, little trap off that channel. You know what I'm saying, though? We either have to get into it before we run into that trend line or get through it and grab it on the other side, right? It's that failure, and then, of course, we get up and over that trend line. Again, I don't expect that trend line to stop this thing, but it can definitely be a bit of a pain in the butt. You know what I mean? It definitely might. It might lead to some sellers coming in and trying to short this thing right back down again. So wait and see how we get what it looks like once we get there. But those are a couple ways I'd like to be a buyer going higher here. Or again, if we don't retest that low, we've got this area of resistance here. So I'd like to get these bears to try once, get those bears to try twice, trap in those sellers. Again, because of that strength momentum, right, the strong momentum going lower, I do want to use a 2-try rule because of the, because we haven't retested that low yet, I like that trap. And then again, you can find those hidden channels off those highs, right off that low. I'll tell you, it's tough to lose money with that setup. It really is. It's a really good, powerful setup in a range environment where we have a lot of bears with momentum. All right. And then again, we can apply that same idea of finding that new channel as we go higher here. I just want to make sure I'm not getting too aggressive into the top of that channel. All right. And then if I want to sell this NASDAQ right now, how would I sell it? Again, I think one way we could look to short this would be if the market was to go at the top of the channel. I'm not opposed to selling it there. I just don't think it's going to hold, right? We'll look for one there. If we go all the way back up, same idea, right? 1, 2, trap and back in. Or, again, retest the high. 1, 2, get more aggressive now. Trend line, right? We'll work on that. There's that failure. Grab that new channel. Drill down to your faster time frame and find that short, okay? So again, 2 try failure. And obviously I'm simplifying this right now, okay? I'm simplifying this. We're not going to just simply blindly sell the high of that channel, right? We'll take the entries that you learn in that free trading course. Those traps, those failures, those pullbacks, those strength moves off those highs. All right? How would I sell it right here? How would I sell this off the high? Well, in this case, you got to remember, there's a range below us, and this is a second test of that channel. So the best way to sell this would be to use that same 2-try pattern. It really is, believe it or not, right? As we go higher here, let those buyers try once, let those buyers try twice, draw that channel off that low, right up around that high. Do we get lucky with the trap? Right, we'll have to wait and see, but wait for that nice strong signal. Once those buyers have tried once, right, tried twice now, you know, with all that bearishness out here, those bears want to get right back to retest the low. I do want to use the 2-try rule on this because of that obvious range, right, above us. I know it's a little bit more conservative than I probably could be on this. I probably could, get more aggressive and go up, let those buyers come in, try to buy off that pullback and simply sell that failure into pullback combination, which is very, very common, right? Failure pattern. We go up, the buyers sort of keep it going. We sell into a failure. And then, of course, grab that first pullback, failure into pullback combination. That, to me, is a little more aggressive, and I want to be with that range above us. So we go up, right? Buyers once, buyers twice. Now we know we have everybody roped in. Strong move down, retest the low is going to be the objective. It's that 2-try failure. And then what usually happens on those 2-try failures is we usually turn into traps on the way down. When you rope in that many buyers, the market will oftentimes collapse and run lower. So wait for that trap and you can add to your position from there. Make sense? Right? So again, 1 try, 2 try, we're selling right into those stops with a failure pattern. Okay, you'll see a lot of examples of those failure patterns in our free trading class. And then again, we don't chase it. We wait for that trap because traps are great at helping us avoid chasing the market, right? Or selling too low. Yeah, excellent stuff there for the short side. The hard part here, I'll tell you, the hard part again, much like the S&P, will be if it goes lower. If it goes lower. One option, much like the E-mini, is to wait for it to blast and run lower. That is effectively a 1, 2, 3 breakout. They didn't do it here. They haven't been successful yet. Tomorrow's a new day, so they might be successful with it, but I can't predict that breakout, right? If I can get that breakdown going lower, then we go out and we go, okay, we know where the market wants to go. They want to take out those big lows, right? 14,362, 14,361.5 down there. We know the market's bearish now. We mark up that channel off the low. We find that hidden channel high. We look for prior swings. We get above prior swings. We get above the moving average, right? Get above prior swings, rope in those buyers with a failure, grab that first pullback after it, trap, failure, pullback combination. Now, where would my target be at this point? Again, we know that big low is the objective, right? Definitely will be. Remember the idea though? The breakout leg is the measuring leg, okay? So this will be your breakout leg, and then take the size of that leg and project it right on that leg. Okay, again, we know where it wants to go, But oftentimes this measured move technique is just a way to really fine tune that final target. You know what I mean? It does look like, though, it'll be somewhere near that low, whichever comes first. Okay, that big low at 61.5 or that measured move. That'll be where my final objective, my final targets, right, profit targets are placed on that move. All right, guys. So I got some ideas for a short side here. Not as easy to be a seller right now. Definitely not as easy right now, and hopefully we'll get a nice little long setup here going back up into that trading range. Let's keep going. How about some oil? So oil is the one out of all of these markets right now that if I was to ask you which one would probably go up tomorrow, you probably would say oil, right? Because of everything we've seen on oil lately has been all bullish, and more bullish. So we had this, what's kind of the most important thing right now on the oil? Again, you can see we're all bears here. It's all bears today. I mean, a little bit of bulls, obviously, but pretty much all bears here on this chart. Oil is a bear market into a trading range. It definitely is a bear market right now. But again, that's where it pretty much stops. That's where it pretty much stops. It's very difficult right now to want to sell this market when A, you have a ton of support right below today's range. And then B, let's not forget last Friday, right? Did anybody remember what happened last Friday? Yeah, look at that move up on Friday, right? They basically continued their move on Thursday. So this smells like a very deep pullback right now off that big high from last Friday. We get a range to finish the day last Friday, right? They pull it back. This just looks like one big deep pullback. You know what I mean? It's what it looks like. Yeah, it's kind of messy. It definitely wasn't the cleanest thing in the world today. But, we had that meteoric run, that Thursday, Friday run up there. Remember, guys, anytime we see this big of a move, anytime we see that much strength, there's a big bullseye right back at those highs here. And so you have to think that 93.17 and then really potentially 95 could easily slingshot our way through. In situations like these, what I'll do oftentimes is I'll measure the amount we go below the high and project that higher, and you can see it puts you quite a bit. We get these bull markets like this, you can measure the size of the pullback and flip it, right? And then flip it, and that'll give you kind of you can see, right? It puts you at what? 95.60. You got to think 95 is a juicy target, psychological target there, for those buyers. So, again, we got some work to do, right? We got some work to do, but it's very difficult right now, like I mentioned earlier, to want to be a bear, at least until we can see this thing, crack lower and hold. I'll tell you, if the buyers want to get back to retest these highs, the sellers, they want to get back to this big range down here. Right? Look at that. Comfortable. Look at this. It's like a lazy boy, right? It really is. It's like a big chaise lounge or whatever the term is, right? That 87.5 level, that's a warm, cuddly, just safe area if the buyers were to give up on this. I don't know if it's going to happen or not. Tensions have not really calmed down in Ukraine. We did hear a little bit of a de-escalation on that overnight. That may have led to some of this confusion in the range today. But, this 87.5 area, that would be where bears want to take it. So how do we capitalize on this? How do we make some money on this situation? I think if I'm a buyer right now, if I'm trying to buy this, I'm buying off these lows. Absolutely. Yep. Buying off the lows, and I'm definitely going to buy it as it goes higher. Obviously within reason, with the right setup, right, as we go higher here. So if we go lower, how do we buy this thing as we're going lower? Well, boy, we've talked a lot about the 2-try rule today because everything's very bearish. So as we go lower, we're without sounding like a broken record, we're going to literally implement the same idea off of these lows, right? So do they run lower and give us that 1-2 trap and back in, right? Do they roll lower and then retest, right? Then be a lot more aggressive, right? Then we go 1-2, grab that trend line and back in, okay? And again, this is the same kind of technique we talked about earlier. Find that new channel. None of this is different, right? None of this is different. 2-try failure, find that pullback off that low. Right? Remember, if we don't, though, strong run down, bears once, bears twice, grab that trap. Okay? That's where the money is in these reversals. right? The little trap entry off that low. This little setup right here should look very familiar to you by now. Okay, this little setup right there should look really familiar. This is pretty much what we've been talking about for the last 40 minutes on this video. All right, so we get that trap before the retest, or do we retest and then get a lot more aggressive, right, going higher, right? Do we tear lower here? Do we tear lower here? Remember, big area of support here. Well, maybe not that big, but we talked about this area last week, right? This little range right there at 90.32 or so, right? Do we torch lower? Okay, 1, 2, trap, new channel, first test is the best test. Okay, plenty of ways there. 2, try failure with the trap, right? To absorb that momentum into that first test. Trap pattern, failure pattern, pullback pattern off of that low, right? And then boy, oh boy, I'll tell you, if they really push lower here, this could get really good because this amount down now goes up, right? And there's your new pendulum swing going higher, all right? That could easily be where this rotation takes off going higher. So a lot of the same stuff, right, off of these areas here. I won't bore you with the details or repeat it over and over again with you. Same basic idea as the S&P and the Nasdaq. As we go higher here right now, how would I buy it as we're going higher right now? If the market starts to run higher, it'll probably be a short squeeze, right? Now, short squeezes or short covering rallies, as they used to call them, a short squeeze usually shows up with one of two setups. One will be a 2-try trap. So strong run up, shallow pullback, higher high in price, traps, baby. This is one of my favorite setups. We haven't seen a lot of them recently just because the market's been so range bound recently. But if we can get a bit of a short squeeze, right? Light this thing on fire. Really get this thing running, right? Really get this thing running hard here. Strong move up, shallow pullback, higher high in price, trap. That's a great setup right there. Or maybe we simply break out and we start to grind. Very common for a short squeeze. Okay, why? Because we don't need buyers to buy up here. What do we need? We need sellers to get out of the way. When the bears start to get out of their short positions, that creates this kind of grind, almost a melt up market, as we call them. Then what do? Yeah, you find that channel, right? You draw it nice and tight off those highs. You bring it down to that low and repeat after me. First test is the best test. Right? You want that first touch of that channel. Not literally, obviously. Right? Well, kind of literally. We want to wait for the pullback and then look for one of the entry setups we talked about so much already. Right? Trap, failure, pullback. All right? Off that low. And again, you know where the market wants to go. You know where they want to get to at that point going higher. All right? Those are 2 breakout patterns I'll be watching for here as we go higher. And then, of course, how would I sell this market? How would I sell it? If the market goes higher here right now, if it goes higher, we get that range above us. Very difficult to want to sell right into it. Okay, they did today, obviously, but as we go higher here, this is exactly where a 1, a 2, a trap off that high. Remember, there'll be a trend line coming up on this low, so that trap will be really, really important to get that short off the high. Again, we're talking a lot about the 2-try rule just because the range is just so big. If this thing runs higher here, what's my concern? My concern is not location. It's a great location to sell short. We're at an area of resistance above the high of that trading range. My problem is that big move up last week and that range acting as a magnet. Let those buyers try a couple times. Use that trap. Use that trend line. I would look at trap on this just because that momentum will be so strong, and then look for that short going back down in. This trend line is going to be a challenge, right? That trend will be a challenge. If we can get around that trend line, though, that would allow us now to use that first test. Makes sense, right? 2-try failure, and then again, grab the entry pattern we get on the faster time frame off of that channel high, right? That's a great way to sell it short off that high right now. As we go lower, we have to get a breakdown. These bears, they have to hold this pullback and they have to jump, right? They really do. It'll really jump off that low. This 1, 2, 3 breakdown, right? Didn't happen here. So So they got to hold it. They got to prove it to us. Once they give us the proof with that 1, 2, 3 breakdown, now we drill down to our faster time frame. We find that new channel, and we find that entry off the first test of that low. Now, this entry lower may not go forever. All right. And again, you'll learn more about how we use volatility and the one-to-one. You'll learn how we take our profit right off those trades. That short might not be a home run trade, but it will almost always give you at least a small target, enough to get rid of the risk, lock in some reward, and then it might keep going lower, obviously, right? It may keep going lower. We know the breakout leg is the measuring leg. Keep that in the back of your mind if it breaks down. What is also very likely is we get that 1, 2, 3 breakdown. We get that new channel for the short. We retest that low, and then again, we're going right back up into that trading range again, using those 2 try failures and using those stop losses as fuel here. So again, not easy to want to short down here, so wait for that real strong 1, 2, 3 breakout. Grab that first test. If it keeps on going, maybe it kind of breaks out, kind of grinds down like that. Same idea. Same idea, right? Grab that trap, that failure, and we'll go from there. Make sure we take some profit off at that low, because that will definitely be the most reliable target there. And then again, measure the breakout leg, and that will give you an idea where that next leg is going to be. All right, guys. Boy, I wish I could keep on going over all these scenarios for the rest of the evening tonight, though, but I got to wrap things up for now. I will fill in any missing pieces tomorrow morning with you guys in the trade room. And speaking of trade room, guys, if you're looking for a great place to learn and earn and do it all correctly, trading is a performance skill. It's not enough to learn the strategy. You got to go out and do it, and the best way to do it is do it with me in our trade room. I'll put all of the membership links for you right in the description of the YouTube video, so grab those links, find one of the membership specials that works well for you, get registered, and I'll see you tomorrow morning at the opening bell. If you have any questions, don't be afraid to drop a question in the comment section below or call that toll-free phone number. And I appreciate you guys tuning in and sticking around all the way to the end. I apologize keeping you waiting here tonight. It was a little bit late to the upload, but it was a busy day. Busy day. Mondays are always a busy day. Now, get out of here. Get some rest. We'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, we'll see you guys same time, same place tomorrow night, and we'll get ready for Wednesday's trading session. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.